Today, we'll dive into the double top chart pattern, a bearish reversal formation that can signal a shift in trend. The double top pattern consists of two peaks of nearly the same size, with a bottom between them creating an M shape on the chart. This pattern occurs in an uptrend and indicates a potential reversal as the price fails to break higher during the second attempt. The resistance line, which runs through the tops, should be nearly horizontal, forming a key level to watch. The pullback between the two highs creates a minor support level known as the neckline. The double top pattern is confirmed once the price breaches the low of the pullback between the two highs, indicating a possible trend reversal. As price breaks through the neckline, it reverses the uptrend and starts moving downward. For a more conservative approach, some traders prefer to wait for the price to test the neckline, which has now become a support-turned resistance level. Remember, the double top is a significant bearish reversal pattern. Stay tuned for more insightful content on Forex trading. If you found this video helpful, give it a thumbs up and subscribe to our channel for more valuable insights. Click the link in the description to join our Telegram group and watch us trade. Happy trading!